words that you're talking make me think you're doing comedy. I shop it on the market every morning like a shopping spree. Yeah. All right, ladies and gentlemen, I got your watch list coming in July 12th, 2019, and I hope you had a wonderful day and are ready for tomorrow. I'm excited because we got a lot more clarity on the market and we had a lot of awesome plays. Beyond that, though, we just hit 40,000 subs on this channel, so shout out to everybody out there. Shout out to Chad, shout out to Cole. I love you guys. Everybody posting your watch list on there. Oh, and yes, do not forget, you need to post your watch list below. I really appreciate you guys. You are awesome, amazing. I'm glad everyone's getting a benefit from this. I have a lot of fun doing this, and it's cool to document all this in general, and that's what we're doing. So post your plays there too. As my gift for the subs, you know, I already knew it was coming there, so that's what we did this week. The watch list, baby. If you've been watching since Monday, the first title was the 1000% watch list or 1000% plays, and fast forward till today, and then even we have some plays we're holding into tomorrow, but there was about 3,000 or 4,000 percenters we hit. One of those was, I think, a 4,000% gainer. If you guys remember, we played the UNHs and we did that. So I'm going to go over all of the plays that we did today, the ones I'm still in, and even what happened with the ones that we played and where we cashed out at. I'm going to go over some of the plays that I also made today, and I was kind of disappointed with myself because we took a lot of gains and I kind of over traded, I say, but they were all pretty good. I think it was just in general with this market. However, you got to keep caution on that. So if you did cash out on anything, paper or real, to learn part of the strategy, you got to learn to kick back and don't reinvest the money right away. So I still went small on a lot of these plays, but I played a various few of them. And then lastly, I got the keys for tomorrow. We're going to talk a little bit about everything going on. There's a few key events that happened today and pieces of news that are going to be important coming into tomorrow. So you guys already know what to do with the watch list. Get that thumbs up on the video if you find this helpful, and make sure you check us out live, youtube.com/thestockmarket, 30 minutes before open. That was a little remix on the brainwash, but let's get to it. Here are the keys for tomorrow. It is overtime, baby. It's the Super Bowl. If you guys don't remember, that was the first key we said, because I said coming into this week, we have one more corner to round, maybe two, before we start getting into these earnings and then the development between the Fed and everything else happening. There's a lot coming on the plate right now, but it's overtime. I said related to the Super Bowl. Just like any Super Bowl game, we said it was either going to be a high scoring, just points back and forth, a lot of volatility, a lot of volume, or it was going to be one of those games where it's just very, very slow and then all the way into the end. And really, that is what we got this whole week. Let me pull it back a little bit there. Even since Monday over here, you could see we start with the gap down, nothing, slow game, then gap down, then comes back up. It seems like nothing's happening. Then they make an advance. One team gets the score. First, it looks like the Bears are winning. Then the Bulls are winning, and now it's just literally down to, up to, and we're at this place. And again, it's even related to those issues we were talking about with the gamma and the support levels, because where options are going to move from here is going to be crazy. And honestly, this is the fundamental reason why we made such killer profits on some of these options today, because of that gamma and what I talked about yesterday. We said specifically options, and especially some specific calls, they have the ability to move very, very fast, or they don't move, but then once they kind of break out of this range, they go crazy. And well, that 3,000 is one of those ranges, and below that 295 is another one of those ranges. So tomorrow is going to be, again, tomorrow could take us into overtime, whether to say we're going to go up or down. You know, we could run up, touch a little bit higher, then come down, or we gap down and then end up ripping above, but it's pretty much going to take us into overtime. I think it's going to be tied, and then a lot of it's going to get pushed into next week, especially with the data we have, but then we're going to start having these earnings and things are going to start leveling out and balancing out. So I'm excited for that, because even like I said too, that being said, with the markets like that, we saw a lot of individual movers. That was the first thing we said on the watch list on Monday. So again, if you guys have been paying attention, I know they're long and we go into depth, but this is why I go into depth, because there is a lot of things going on, but you will hopefully start to see all this connect. That's why I'm kind of giving you this recap here. But well, again, why I'm excited, the contrarian thesis is coming into life. Again, I didn't agree with the market pricing, and everyone was saying that Powell was very dovish or going to be accommodative and was going to cut rates. And I felt weird given that a lot of people weren't on the same page as me, all the media down to even the bonds itself. But we even had a crazy bond move, which I'm going to explain today for you guys. But they had now another testimony by Powell, this time before the Senate Banking Committee, not the House. And these guys were a lot smarter, and they asked some specific questions. And a lot of it sounded the same. He did take, and this was partly one, there was the social media summit, which we're going to discuss too, but the way he talked about Libra kind of was a little different than yesterday, and that's what made me kind of want to go for the Facebook push we grabbed today. But he sounded a lot more hawkish or not supporting of it. That was part of it, but they talked about all that stuff. But the big thing I got from it, they're a lot smarter with the, being in this banking committee. They asked a lot better questions to give us more answers. So I'm glad we watched this. And again, we go through any of these important news events and streams live, so make sure you're on the channel. But they knew, and just like everybody else knows, you ask Powell, are you going to cut rates, or what do you think about the economic climate? Because that's what he's looking for in the trade wars and pressures. He's going to give you the same objective answer. And he said some stuff that could have been taken as a lot more dovish that I saw from this meeting. He did respond a lot more dovish in some areas. But the one question someone asked him, they just flipped it on him. And this is what I think gave a very, very clear-cut answer. They asked him, would you now, if the data warranted, if the same data you're saying would make you cut rates, if that went away and the data was there, would you consider raising rates? And he said, absolutely. It was not even a hesitation, and I think that gave I think that should have been a lot more shocking. I'm surprised Algos and other people didn't pick up on it, but that alone for me it got me a little more excited with the next factors I'll share with you. But interesting enough, what he did mention was Volcker. And Mr. Volcker was the head of the Federal Reserve, I want to say the 70s or 80s, and I'm pretty sure he had a really long term, but he had a very unpopular, and he again, Powell compared the same thing, but what Volcker did was very unpopular at the time. He kept raising rates when, everybody, literally even riots were started because of this guy. People did a lot of things, and honestly, you want to know what the funniest part is? Volcker got fired by FDR. Excuse me, not FDR, Reagan. They fired him because he was not an adequate deregulator, and literally all he wanted to do was keep inflation under control. But it was just very unpopular what he did at the time, and he was very just straight to it. And eventually it led to something called the Plaza Accord. And if, again, I've talked about this with the Shanghai Accord, where back, 2015 or 16, and then even recently in January, I said that was the Shanghai Accord Part 2. That is where they met with another country to agree with, hey, let's get these prices and currencies under control. Otherwise, it's going to create problems across the board and unbalanced competition and all that. And ironically enough, that had to do with Japan and the US at the time. So the fact he brought that up, I don't think he meant it in all of those ways, and I think it's just ironic that Volcker got fired. But interestingly enough, there is a lot of parallels between the two, which I admired and could see from there. So that's good enough for me. I did get an SPX spread or a put on there, so I liked it, because now, again, my thesis is simply Trump is either going to throw a wrench in the trade deal now to force the markets down, or the markets could go down on their own, or even now, I think he could even use this social media and attack on tech stocks to kind of purposefully worsen the situation. I know that seems counterintuitive because he's bragging so much about it, but simply because once he gets the rates, it'll set up a fundamentally good and a better environment for easier money and gains to occur. And then he'll cut a trade deal. And then, once there's a trade deal, you get rid of all those pressures, and now the rates are lowered. That is a perfect storm for re-election and the market just going absolutely crazy and really delaying any problems we have for another 2 or 3 years. And yes, it does work like that. But more evidence to that today now. Well, yesterday, Trump was talking smack on Iran and said they're going to raise sanctions really soon. And then today after hours, there was a report from Politico saying that China and Iran, that U.S. might actually start going after China because they are still helping Iran and they're still doing the oil stuff and they're not really enforcing that. And China's kind of already stepped in with Iran and talked a little smack. So that could be another impetus to say, hey, this trade deal and this trade truce we had from the G20 could be going away soon. And then this morning, Trump said, excuse the spelling errors, but Trump said that China let us down by not buying agriculture products. That's what he says. And then a few hours later, the Chinese editor, that guy of the Chinese Daily Mail or something like that, he tweeted not to let the president, he said, Americans, congrats on the stock market, but do not let the president trigger recession with trade war. So that mixed with kind of the hawkish testimony, it allowed me to get this spread on the puts. However, I am going after some shorter term plays, and we're going to go over that and you're going to see. So there was that part. And again, you could see what happened in the market today. We did gap up again, even at the highs. We were up, we dropped down, and this is when that stuff was happening. And even as that Fed speech started, or the Fed speech started at 11, but the Trump thing, that what he said was there first. And then as we had the Fed speech and that, the other guy, the China stuff, tweeted, but the rest was kind of the move from the Fed. But then we had these tweets about social media and all this, and Amazon started going down, and Amazon even announced something with their workforce. They're going to retrain their workforce or spend $700 million. And again, that could not be, again, they're spending money, and some people are like, oh, that's good, but they've been getting some heat for their working conditions for Amazon workers. A lot of that has actually been getting a lot of heat, and the workers have even said that they plan to strike on Prime Day. But that could kind of be showing kind of their caving in or save a face. But them spending that money at the very least will be a big one-time charge for their earnings at the very least. But part in part, the next real big thing was all of this culminating. And then the Fed, Powell ended pretty early and nothing went too crazy after what he said. But then the 30-year auction was awful. And this means that the rates went up. The demand was very low there and the bond rates ran up. And again, it's just basic supply and demand. I have a video on this if you guys look up the bonds, the trading fraternity, but higher demands for bonds is yields go down. Think supply and demand in a way, but it just because it's how much you're returning, it's hard to understand the product. But if the demand is high for bonds and people want to buy the bonds, they all go and rush in to buy something. So supply and demand would dictate that the price would go up and then the yield goes down. There's more people rushing into it. They're getting less and less and less. So again, watch that video if that doesn't make sense. But on the reverse, low demand for bonds means the yields go up. So the 30-year went up today a lot, and the other bond rates did go up too, which was different than what the spread we saw yesterday. But this was interesting for a few reasons in the reaction it had. And now this was the worst auction since the Trump election in November 2016, and stocks dropped potentially for a few reasons off of this, because as we've seen with the rates going up, we've seen the stock market actually benefit off of that. And then when the rates go down, we've seen negative effects in the markets there because of everything with the yield curve. So why today, when the 30-year went up, again, that was the weird signal we saw yesterday. But now today, there's two reasons really. Is that one, there could have been funds or even strategies with algos that are hedging with their risk, and they could have all, again, considering what we've been seeing, they've been so long on the bonds. And again, think about how many people are pricing in this rate cut. All of those people are in bonds, and all that's a big strat. It's a lot of money in a lot of bonds. So anybody or any funds there, as the bond rate started to go up in that auction, those results came out, they started to get crushed. So you saw rotation. They would have had to cover or to keep holding the trades or to sell out, and they wanted to rotate. They would have sold out of their other stocks and went in. I don't really believe that one as much. That's not the reason I think. I think at the very thing, it's just showing investor confidence, but at the core, liquidity, because it simply, that could just be lack of demand. The auction wasn't there. People don't have money to buy. People have already bought in a lot. Or even then, if people who did want to buy bonds, they're sitting on the sidelines kind of waiting. And that is very reflective of what happened before the election in 2016, because people were still very worried as to what was going to occur. So that's pretty much it. I hope you guys enjoyed that and get to learn from this. Let me know what you guys think. Be on there on the chat. And thank you guys all for being respectful in the comments and also in the chat. I really appreciate that. You guys did awesome today. But now let us get into the plays. So I'm sure you guys want to see the first one, UNH. And now this was crazy. It was even related to Cigna and all the healthcares, which went up a lot. And now we didn't play this for the news as we were playing it this week. We were just using the prices. And again, go through all the watch lists. You guys, this will all sound familiar with the prices we've said. But we got lucky. And that's, again, even on a short-term option, we got lucky. But that's where, stalking these options day after day with the prices. You guys, how many times have we put UNH on the watch list and been seeing it on stream? There was a bill to get rid of the drug rebates for these healthcare companies, and they all popped on it. So again, this play should look familiar. The 250, this closed at $1,100 today. If you watched on the watch list, and when we bought it, we got it on Tuesday for 37 cents, if you remember that. That's 2,400% today. And again, total, I think that's off the close yesterday after being up another 100%. So we made a pretty good amount there, but I got screwed over because I did this on the Robinhood account. I can't wait to show you guys that account now. But I did this and literally it was only up this morning, and I should have held. I just didn't hold it. And it was a mix. It was cool. You guys should go watch what happened in the morning. You could hear me freak out, and I did panic because it was a huge candle down right off the open, and it was already $7 in the money. I paid 30 cents. I was like, okay, I want my profits. I was on a small $200 account there, so it dropped, and my contract went down to like $1. Literally on the bid, but I put in an order at 7 and it didn't. Robinhood, I've never had to trade during the volatility with it, and man, I feel for you guys doing that, be very cautious. But at the end of the day, I panicked, and that's what I'm saying. Yeah, I could blame Robinhood all I want, but I did make my own mistakes. I panicked on there. I should have just left the order there and let it sit. I was trying to go too fast because eventually it came back up, and I got $4.50 for it. So I bought it for 30 cents, sold it $30, sold it for $450. But then a few minutes later, it went to like 700, and then if I held it for the rest of the day, it closed up at $1,100. So congrats to anybody who got in that, and I think it was a good learning experience. Again, if there is moves on these tomorrow carrying over, I think Cigna might be a better play, but we could watch those and try to again use the push it to the wall strategy and look for some frogs there on the Friday. But that was the first one on our list. The next one, this one wasn't 1,000%er, but I'm still holding this one. I know, again, I'm holding it for the rotational elements, but I put this on yesterday because I bought this one yesterday. You guys remember, we got that there. You could see, this should all look familiar. We bought this at 24 cents for the 212.50. Again, another weekly, and this is why I said it in the beginning of the week. Individual names, and again, by playing, I've set prices on all these. Remember, I told you guys this was why I bought it, because I saw it the day before. I remember it was at 80, then it came down here to 22, and I was like, all right, I kind of like it. And then it dropped even more, then it came back up, and I said, okay, I'll grab it around here yesterday because it was still at the low price, and it was still at that 20 price I wanted from when it dropped from it hit 80, I think, at one point on the Monday the day before because it kept coming down. But we got that. Oh, see, that's a 215. What am I saying? No, yeah, actually, no, that was the same thing because remember, it was up earlier and we wanted the 215, but then it's the same strategy even with UNH. When you're playing the shorter term contracts, what occurred, the stock kept dropping. So now I said I said 20 cents for the one, pretty much one outside the money. For this one, UNH, it was 2 strikes outside the money. I set my price at that $40. Again, all of this should sound familiar. But when these pretty much capitulated, I waited for these to come to that price that we wanted. And that's what we did. Because on Monday, these contracts were going for $2. Then they dropped down to 80, 90. And that's where I was like, okay, because then these already capitulated enough. I was like, okay, we'll see what happens here. Then Wednesday, they dropped again, even 18. They kind of closed up at 30. They had moves there yesterday, and then I picked those up in the morning, and I got them at a pretty low. I think I got them early in the morning. Dang. Oh, I'm just being retarded. Well, no, that was today. We got them here. Again, 24 cents, around 11 or so at the bottom. After, again, I said this is the one that was 80, 90. It hit my $20 price target. And again, going small on these, if you do the math, Home Depot, $24. We played the NVIDIAs. UNH's like 30, 30, 20. That's $80 already for these 3 plays. And again, that's as you see, the more you play, these start to add up. But at the very least, you guys could see what you could do with these small options, but you have to control it, and they're weeklies and risky. So you have to, UNH is allowed me to even hold these because we got that profit there. But pretty much this one clipped 160. I think it closed there at 150, but we paid 24 cents for that. So I think it's closing up at like 461%, not too bad. And I like that, again, as a rotational. I think, no matter what happens tomorrow, it could probably do good, or it might make a move there in the morning. But I'm going to look to sell that one quickly in the morning because it expires unless there is some other crazy move. But I like that one a lot. Next, we got the NVIDIAs, and again, this was the same one. We stocked it from last week with that move. Remember, we took a loss on it last week, and I said the rate was even cheaper there today with, again, that it was what I said, $50 for $7 move. I got one for $30 for a $5 move. We got the 165s. Again, this was right in the morning yesterday, and we did these both, you see, at the same day here. And those were my only 2 trades I made in front of you guys yesterday. But we got those at 34 cents right there off the morning. See, and that was within what? Yeah, we got within that 7 minutes, and then it just skyrocketed there. It went up to $1, remember, like we said, and then it came down, but we still held it. Again, and as you see, this is why you don't go, if you guys put in a lot of money into these contracts that are very volatile, if you put in $300, it would make sense to try to cut your profit at out at break even or even down 20-30%, because 150 is a substantial amount of money. You know, after I pay commissions and everything, it doesn't make sense to cut losses on some of these. That's why you got to go small and smart. But today it hit 325. We bought it for what, 34 cents? That's another 1,000%er right there. And again, I was watching this from the beginning of the week. We kept putting it up, but it was the same exact approach where we had to wait and wait and wait for those prices to do something, or even wait on the stock. So again, I'm still holding that one. But what I did instead, I went on the Robinhood account now as it was up here, and that play didn't work out too well just because NVIDIA had a lot of relative strength. But I went and I got this 162 put for 30 cents, and it dropped about 50% here. But the whole idea is that if, you know, being in the money on this contract, I'm pretty much saying it's either going to gap down tomorrow, which I wouldn't expect. Hopefully it doesn't have as much strength, but if it comes down and gaps down, it goes back to where it opened today, and even below that, we'll be able to get in the money again and profit on that tomorrow. Or if it just keeps staying where it's at or even gaps up and goes, I'll lose $30, but being in the money, that's only a 30-cent move more. And so, you know, I'm $60 in total there, but it's giving me now, you know, instead of, I could have just sold it at $3 and took the profit, but I was very, you know, NVIDIA held up really, really strong today. It was very unique, and that's why I did want to hold it. It had a lot going for it, so that's why I kept it. Then there is now the rest of the plays. I'll show you these. I made these also throughout the day now, and this is where I said I kind of got carried away because I started hitting them, and then I was like, all right, well, we got money on the Robinhood account. We're getting this gamma going there, and I said it right when I took the game. I need to control myself with it, but I was just seeing a lot of these prices and where they were at and just how the market was moving and some of the events we had there. And as I started getting more confirmation, but again, I know that the calls had certain advantages as well, and some of the puts related to certain events. But, you know, in Boeing, I got Boeing. It had a news event yesterday, and really, you guys know I've been going after this on the put side. Really, I got it because I think it'll probably, you know, hopefully gap up here. And I'm saying hopefully because I'm biased and I'm in a call now. But it was looking, you know, really surprised today. All the other defense stocks were doing good the other day. It kept doing its thing here. I figured if anything, it could go up and then start a whole nother series of bad news tomorrow. And they said the engineer resigned who managed one of the 737s, like engineering or something like that. But that's not too important. But one thing is, Attorney General Barr recused himself from the case with the investigation on him because his old law firm that he used to work for is representing him. So I think that is very interesting. Maybe it could even highlight strength towards Boeing. You know, they got connections, baby. But watch out for that one. And this is the play we made. I got it here earlier in the morning, but I got these 362s, and this was again, I made all these pretty relatively quick in the morning. It was after this first hop up. I think it was around here at 11:26. I don't know, does Robinhood give me my times when I buy it? Yeah, Robinhood doesn't tell me the time when I go to look at it, but I got these for 23 cents, and I did it. And again, I did these trades on Robinhood because as I was seeing some of these weeklies, and again, it was relatively close to the money at that point. I think it was at 357, so it was like $4 or $5, and again, kind of getting gas and at this resistance point to a degree. And with the market, it made some sense to me, and because I wanted to grab another put too. I wanted to get a little bit of a hedge there. And honestly, after seeing UNH, that did get me inspired on some of these plays. Again, the big movers with low price points, you could do some damage. But again, I knew right away I can't get carried away, and that's what I was kind of scared of, because if these plays don't cash out tomorrow and we get cucked, I'm going to give back a lot of profit. I think $100 of the profit total. And that's pretty sizable for the Robinhood account. I have to show you what that's at. I got these at 23. They shot up almost instantly. They went up to 60. They went up over 100%. They came down, and someone snagged these at 18. Then they came right back up. Boeing was moving crazy, but it still held up here. Just under 100% gain. So I'm still holding that. And again, I think if we get a gap up or any, again, a lot of these stocks, NVIDIA and the chip maker has its own thing going on with it, but Boeing could inverse it just like Home Depot as well. Home Depot and Boeing could both kind of do their own thing regardless of what the market does, and they'll just get a little bit of inspiration from the market, but still do their own moves that they had in mind. So we got that one. And then lastly, the other play I made was the Facebook. And again, I told you as the news was coming out and what we were looking for, I got that one early in the morning. I think it was just around here because it was still at 202, I believe. We grabbed, and again, I called this out on the stream. I know a lot of people hit it, so show me some love, baby. Make sure you bring a friend to Colt Day tomorrow. Oh, this one came down. I think that we had the run up. It was doing a lot better, but we got this one at 34 cents. And again, it was looking a lot better midday because there was still time, and it looked like it was about to break through 200. But that's why I like it. If there is any gap down or any other move similar to today, and today wasn't too big of a move for Facebook, which is why again I like it and it's realistic. We got these at 34 cents, pretty much. I think it was right around there off that. Again, it started to come up from one of those bottoms. It shot up to 50 cents, did its thing. It was a slow mover. Eventually went out 96, almost $1. So it's like, what, 200%? A few people took profits on it. I still kept holding it, but I still have it today. So that was another decent play there. And then lastly, I made a few plays there at close. You could see here, there was Apple. I played Apple, and then I played Microsoft. Both of these ones, I got a Microsoft put a 136. I got it for like 10, 11 cents. Again, and I did this all with no commissions. It made sense for me to throw $10 there, and I think I got another $10, $11 put on Apple as well. Again, because as it started dropping, and people were saying it was because their iPhone hack or some security issue with people being able to listen in. That news dropped 5 hours before the stock dropped. I think a lot of this was related. I forgot to mention the social media summit. So now I'm excited. This is part and part why I decided to hold that Facebook play, was because of this social media summit coming up. And then even then, back to Amazon, and Trump's tweeted even after hours after it's wrapped up, he said he's going to start exploring all regulatory options they could do to get this fixed. So again, even the talks of it could be bad, but if they do roll out something, you guys saw what happened with UNH on the upside when the White House proposed something. There's going to be winners and losers when it comes to this. But Amazon really started to begin this sell-off with everything in the bonds and their bad news, but they kind of started pointing down again, like Apple too at the close. So I got to put on there, and I got a weekly 1972 for like $60. And so again, I needed to move $30 tomorrow, but I'm not proud of that play, because I meant to get the next week, and I was like, wow, I thought it was super cheap. I was like, 1972 next week, $60. I was like, oh, I didn't see the date. But either way, I mean, I'm cool with holding them, just kind of because this event, that's what I'm saying. Tomorrow, it could be overtime, but there is a potential. I think that, I think we might see a touchdown get ran back on the first play, but then it'll eventually just still lead to a tie ball game, if you know what I'm saying. And then I did play T-Mobile. we got shook hard on this one. I bought a put as it was coming down there. I think there was a rumor about the deal with Verizon and stuff getting extended. But again, that move was big on velocity and move. And a lot of these moves, even with Boeing, Facebook, this was going on too at the same time the Fed was happening. So, and even the tweets by Russia with China and all that, all of this was happening at the same time. So there was a lot to focus on. But I think that's what kind of made these plays that much more exciting and more appealing to me, because, there wasn't too many eyes, and the volume again was still pretty low, despite, look at that stair step right there, man. But there's that. And lastly, I guess even for all these, and again, these are plays that I added on today, not the ones we've got on the watch list. So by me playing these, I'm showing you guys these so you could keep these on watch tomorrow, because I think they'll all be interesting. Because the last one here on this chart is SRPT. I think now, again, Illumina, now this is what I want you to watch. They could be good, but you guys have seen they'll either be a continuation after bad or good earnings, or it's going to cuck out there. So this one will be a great one to watch in the morning. Make sure you guys remind me on that. But Sarepta, remember, Pfizer got killed, and they did good off of it about 2 weeks ago, 14 days ago. My call actually that I accidentally bought again on that, remember, I didn't cancel the order. These are coming back up, but I think there's going to be winners and losers in the biotech space, especially when you see downward guidance and stuff like that, and that's why Illumina dropped. But I'd watch both of these, and Sarepta too. But the thing about Sarepta, which makes me, again, want to watch it even more, the spreads are crazy, and the options are still very, very expensive, and I think that's the market maker telling us something. So keep an eye out for that, and even all the rest of the healthcares that we even saw rip today in general. We said get Amazon on there. Next is Starbucks. And these three plays right here, Starbucks, McDonald's, Disney, these are the frog plays to watch tomorrow. Starbucks literally going to break 90. That will be another 52-week all-time high, key psychological support, or it'll show resistance there and kind of come back here to 87 or 86. But depending on what it does, these could be good. But remember, on the frogs, you got to get them more towards the later of the day, or you're going to snag them in the first couple minutes, and you have to be extremely right. But there's more of a probability at the end or middle of the day, or depending on the catalyst of how it's going to move. But I'd watch that one. Next, I'd watch Disney, and this is going to be one of my favorites, because even the July 19th barely went up on the contracts, and again, it did the same thing near its highs, and it could do a lot, and they have earnings coming up. So I think this one on the weeklies, they're going to get extremely cheap. Same thing with Qualcomm too, I forgot to mention. And I even bought the Apple at close too, because Apple started to drop, but then Qualcomm dropped a little and then came up. Remember, I said there's only one case away from a big move. Those options got really cheap. So I had some. I didn't want to force it earlier today. But I'm going to see what happens there tomorrow and keep my eye on that. But even Disney itself, that's going to be a good frog play and can end up running there. Again, even if it doesn't, that's the best part about the frog. You could wait till the move. It's better to be late than wrong. And then lastly, our good old McDonald's. same situation. It's just right there at that 212.50, but now there's going to be 1 day tomorrow. So the minute it falls out of the money like it did today, it's not going to hold a 80 or 60 cent value. It's going to plummet to 10 cents, and that's what we'll want, if not lower, because again, you need big moves. And that's the thing. If we don't get underlying moves tomorrow, you got to be careful for it and try to understand and spot the difference between the overall market and individual stocks running, because we saw big individual moves at the open. The market didn't do too much, and then at times when the individual names wouldn't move, the market ripped, or even when tech was dropping, the market would go up and hold up. So keep your eye out for that. But there's that, baby. We had a good day. I hope this helps, and I hope you're ready for tomorrow. So make sure you guys get that watch list. Make sure you bring someone, okay? You saw what Trump was saying on social media. We just want to make sure that's not happening to us. Show some love, everybody. Come in the game. Be positive, just like you guys were. And let's make some trades, but let's make some, and let us make an education, huh? And make a learning. Yes, let's go.